President Trump's right-hand man, Elon Musk, has sent a letter to the administration warning that it could be affected by retaliatory tariffs from the escalating trade war. Tesla's value has been decimated by the markets. The Dow appears headed for its worst week in 2 years, even though right now, as you can see, it's up nearly 600 points. But as of last night, more than $5 trillion in value had been wiped from the markets in just 3 weeks. More money than the GDP of every country on earth, other than the U.S. and China. Joining me now is CNBC's Ron Insana, senior analyst and commentator. I'm trying to get my head around $5 trillion, Ron. Help us put that number into perspective when you're talking about a loss like that.
Yeah, so it's time to get our heads wrapped around that perspective, because this is a normal, at least for now, a relatively normal 10% correction after the market was up, Chris, 50% over the last 2 years. 23 and 24 were the best 2-year period, was the best 2-year period for stocks since 1997 and 1998. So we're seeing a 10% pullback, which on the one hand is considered normal. Remember that the market capitalization of the U.S. stock market is now about $55 trillion. So it's a pullback within the normal confines of market behavior. However, it also comes as a warning. We're seeing some deterioration in the stock market and small cap stocks, which are down 18%, and some of the big cap names that have been very popular of late have fallen more than 10%. So stock market's growing increasingly concerned about what it views as a rather chaotic and approach to policymaking that has no clear end game in sight. And so today's bounce, while probably just a technical bounce at the end of the week, doesn't mean much. The markets are growing increasingly concerned that the policies that are being put in place right now may not just be short-term pain. They could also, for long-term gain, it could be quite the opposite.
So what do you make of the fact that even Elon Musk's company, which essentially just got a bunch of free advertising, bringing in their cars to the White House, is raising red flags now?
Well, they're getting killed overseas. I mean, if you look at their European sales, I believe they were down 75% in February and down 60% in January. The stock's been cut in half from its all-time high. So that's a 50% decline. We'd call that in any other set of circumstances a crash in the stock. So if sales are falling overseas and you're about to be putting tariffs on goods coming in from overseas, expect retaliatory tariffs, or even, as you've seen in Canada, they're pulling American products off the shelves. You could see that type of backlash, which Elon Musk, both in the polls and in sales, is seeing for whatever, whichever unpopular moves he happens to be making on any given day.
Meantime, Vice President J.D. Vance was asked if he could rule out a recession last night. He didn't. Take a listen.
Well, look, I think you never can predict the future, but I think the economy, the fundamentals of the economy are actually quite strong right now, and we'll see how this unfolds.
We'll see. And that comes just a couple of days.
He just admitted that the economy is strong right now, which it has been for the last couple of years. So they didn't inherit a mess necessarily from the Biden administration, as they've claimed in prior comments. But yeah, it's hard to predict the future here, Chris. It seems that financial markets.
But is that part of the problem, Ron, that they're getting these mixed messages? Is they're going to, recession, no recession, recession, no recession? We aren't getting a straight answer on what this administration thinks.
Right. And I've never seen a president or vice president come out and say, we're about to have a recession. I mean, the last time anybody did that was Jimmy Carter, and
we know how that went.
Political price for doing so. I think, though, it's somewhat disingenuous not to recognize that these policies, particularly in the way in which they're being rolled out right now, won't have an adverse, at least short-term, if not longer-term effect on the economy. As I said on CNBC yesterday, I think the financial markets are underpricing a wide variety of risks, not just on tariffs and trade, but on geopolitics, and the belief in the Trump administration, and particularly by the president himself, that tariffs are a great way to raise revenue and replace income taxes, if you will, to a certain extent, and fund tax cuts. I don't think that the markets appreciate fully the extent to which the Trump administration really wants to reorder the post-World War II architecture, both in economic terms and geopolitical terms. And I think that's the big risk going forward, is that they're missing the big picture. They're selling off on this nervousness over tariffs and trade and a handful of other things. But I think in the longer run, they may have even bigger problems to deal with.